So here we go. Good evening once again. 27th of April 2024, Saturday evening, usual masterclass session. And I'm going to quickly take a look at the Nifty, the Bank Nifty, and the rest of the sectors. Nifty weekly has gone really choppy. We have seen a higher high. We have seen sharp sell-offs and an equally sharp bounce back. Did not expect the bounce back to be this sharp, considering we had a proper breakout failure. After a breakout failure like this, an extension to be that steep is really rare, but so be it. From a directional point of view, let's first understand that the market has gone kind of directionless and choppy. That's the kind of a market we are in. We'll say it's volatile. You can use the word volatile or choppy just to understand that it's oscillating on both the sides, and a lack of clarity or lack of direction, because there is no follow through buying or follow through selling. These are difficult markets to trade because for a directional trader, because there's no follow through movement. And not to mention the sell off and the bounce back, both are fairly steep. Now, in terms of the weekly chart, we are still in an uptrend. The momentum readings, and you'll find that my charts are way too cleaner than what it used to be thanks to the evolved indicator. I'll walk that with you a little later. Is still suggesting that the market is likely to slow down, and by slow down I mean directional slowdown, which is the fact. Direction has slowed down, volatility has not. Last week's low is extremely crucial for any kind of serious weakness. Number one, if you find the index slipping below last week's low early next week, that's the first sign of weakness. It should ideally lead to follow through. If next Friday we see a close below this low, that is when we meet next Saturday, we see a close below this, then we get a confirmation of much further downsides. This is the downside. I'm talking about the downside first because there's clarity beyond which the downsides open up. Let's talk about the upsides. The upsides, of course, obvious is the previous all-time high, from where we had the breakout failure and the sell-off. Now, if you consider, if you take a look at the daily chart, and if we mark this as the breakout level, which was the breakout level, this was the entire breakout failure. So the index is back to its previous breakout level, this. So it's very important, number one, for the index to scale beyond that. It's around 22,500. To stay close above that, and if it does, then the possibility of 22,750, 22,800, maybe 2,300 and much more opens up. It's not going to be easy because the readings on the weekly chart is angling more towards the downside than on the upside. We had a great bounce back, and so short-term parameters will be overheated. And so that's why Friday we did see a bit of a weakness sell-off towards the end of the day's trade. From a very short-term point of view, this is the zone which is around 22,300, 350. That's where we had the breakout, we had the pullback, the throwback, the supports. So 22,300, 22,350 exactly is the zone of short-term support. As long as this holds on Monday, Tuesday, then the possibility of bounce back is there. By the way, what's the weekly low? The weekly low is 22,198, so around 22,200. So we're talking about 22,300 as the short-term support and 22,200 beyond which it triggers more weakness. So keep these two levels in mind on the downside. Let's quickly take a look at the RRG graphs using my stock charts subscription, and let's quickly roll it down to 1 week. We'll use 1 week first, and I'll sort the percentage change to understand what happened in the market last week in terms of the sectors. Metals, exceptional gain of 3%, followed by the small cap, almost 3% gain, and then real estate and media, and then 1.2%, 1.1% kind of gainers from FMCG, consumer durables, auto. IT continues to suffer. From a contrarian point of view, it will start to look attractive. I do not track fundamentals, but valuation point of view, I'm sure it will start to look attractive, this entire pack. I would suggest, if you do not understand or track fundamentals, if you cannot pinpoint or pick up or bottom fish a stock per se, then it's not a bad idea to buy the entire bouquet. This is purely from a contrarian bottom fishing point of view. Don't try to time a falling sector, a falling stock. It's not a bad idea to buy the entire IT ETF. You might see lower levels, but eventually this sector is an important one. So it should turn around. It will turn around. If we extend this RRG graph to generally we look at 12 weeks, around 3 months, and this time we are going to sort it in terms of the tail rather than the percentage. We continue to see the strength staying with the same names: auto, metal, and consumer durables is picking up. Last week we did discuss metals still looks very good. Auto losing a bit of momentum, but still not that bad at all. So let's quickly take a look at the charts of auto, metal, and consumer durable. Auto, CNX Auto on the weekly chart, exceptionally strong, holding pretty well. We have a breakout in our hand. What happened the last time the sector gave a breakout? It wasn't a great breakout. This was one of those breakouts that held well, decently held well. Now this was one move which couldn't sustain but sold off. This was the second last sell-off, which is this one. This is the last sell-off, which is this one. This is the third last correction, which is this one and this one. Do you notice something on my weekly chart? That every time there has been a correction, the Heikin-Ashi behavior, and none of the lows were compromised. All these lows held really well. A sign of a very, very strong sector. But nevertheless, we should keep in mind one thing. Number one, the stock is giving us a breakout. Number two, it should sustain. If we see Monday it's slipping down due to any stock, whatever be that stock, then that will be a sign of a breakout failure, and then you have to keep in mind. Is this a place to buy? No. Is this a place to short? We don't have confirmation yet. When will we get the confirmation? If at all, wait for the index if it slips below this particular fractal high. That's auto, not to be shorted, and of course you can't buy at these levels either. Consumer durables, pretty good move on Friday's trade. Decent movement. The upsides seems to getting capped every time it goes up. It's not the kind of upsides when it rolls up continuously for week and week. Over here, if you can see 3 weeks, 2 weeks correction, 3 weeks, 1 week correction. So every time it inches up, it's facing resistance. It's not a one-way ride on the upside for the index. So that's why it's not easy. Again, you have a breakout here on the daily chart, consumer durables. Keep an eye on few of those heavy names, which heavyweights in the sector. Looks good. One should not buy at this level because it's stretched and cannot short unless you have a proper confirmation. The third index which we discussed, which we found in that, was auto, metal, and consumer durables. So metals will not be much of a surprise. There you go. Very, very strong readings across multiple time frames. Stay bullish. Don't try to buy at these. Don't attempt to chase and buy at these levels. Now let's see. I'll just spend 2 minutes here with the metals chart just to highlight this area with you, this particular area, just to show you that that's exactly what's happening with the auto. This is exactly what's happening to some extent with the consumer durables. It's choppy. It's facing resistances. And there's a tussle over here between the trend and the momentum. The momentum is not supportive. The trend is very supportive on the upside. Either party will win. If the trend picks up, it will be a strong breakout. If momentum is strong, it will take the index down. It's difficult to predict that. A look at the higher time frames like a monthly chart or a quarterly chart can give you some clarity. And the clarity that I get from the metals, extremely strong. Do not even attempt to short this pack at this juncture. Now, the ones which are improving. The ones which is improving is CNX Fin. This is good news. Bank Nifty. This is very good news. And of course, Nifty vis-a-vis CNX 500. So, Fin and Bank Nifty, we discussed this, I think, last Saturday when we had our session. we discussed that if we get some support from the market, it can come from selective banking and financial. We've seen down move in down move in Kotak Bank and Bajaj Finance, Finserv. We saw a sharp rally in Axis Bank. So it cannot be across the board. It has to be selective, right? We need to be careful about that. Bank Nifty weekly chart decently placed. Daily chart also fine. There's not much of a worry over here. Remember this breakout, this triangular formation kind of a breakout, then the throwback, and now the move. Now, to be honest, this chart looks fairly bullish unless something dramatic fancy happens. 49k, 49,500, 50k, because the weekly charts, this one is decently bullish. The possibility of higher upsides is definitely there unless the prices react sharply. I don't see any particular technical reason on this chart right now at this juncture of weakness. Though it is there in Nifty, Bank Nifty is not showing that. What I'm trying to get to is if this support from the Bank Nifty or some selective financials stay, then we probably will not see a very sharp correction in Nifty. On the other hand, we might see further upsides. So the Bank Nifty support is very, very evident in this case. And this is the improving quadrant, which means that if everything goes well, this guy should be heading towards the leading quadrant, which can lead to serious positive move for the next, let's say, 2 to 3 months. Now, the ones which is weakening, this is that pocket which was earlier very strong, now slowing down. Oil and gas, real estate, healthcare, and small cap. Now, small cap has been very, very sharp in its bounce back. I'll start with healthcare, CNX Pharma, because the weekly chart had given us a shallow breakout fails. After the fall, it pulls back. Momentum all this while has shifted down, trend has not. So again, the same tussle between trend and momentum, what will happen? Very, very simple. These are not very difficult. A slip below last week's low, the momentum will drag the trend down. However, if you take a look at the trend or if you take a look at the daily chart, what you have on your hands is just a choppy, crazy, volatile market or a sector. Upside breakout is beyond this, downside breakout is beyond this, so expect the index to give you some kind of a breakout movement. Now, when I get these kind of readings, when I get see these kind of formations on the chart, I am more, I tend more towards the breakdown here. Why? Because relative downsides are much more. The setup is more towards the downside. The up move, if that happens and when it happens, it essentially negates the setup. This particular formation is that of a fall. It does not mean that it will every time fall. If it falls, the fall will be very, very clean for 2-3 candles, which is very good for a derivatives trader. But when they don't fall, when they negate the setup, it goes up. The upsides may not always be very clean. In this case, I don't think so it will be very clean. So it will be difficult, again, selective. Pharma was the one which is weakening. Realty is the other one which is weakening. Now again, you can see this. Gone are these days. Now every 3-4 weeks, you get a down move. And that's why you continue to get some what we call as lower momentum divergences. You need to be careful. Not easy. Definitely not an easy sector. Very difficult to name this kind of a pattern. It's taking the shape of a gramophone pattern, which is also called the broadening formation. Please don't buy at this juncture. The other sector which was weakening was the oil and gas or the energy, and it has gone range bound here. I can see a bit of a divergences playing out. Momentum has slowed down. I don't have a setup per se like I have in pharma, but it's likely to stay selective. Keep an eye on the OMCs, Hind Petro, IOC, BPCL, particularly Hind Petro. Looks good, can offer a bounce back. Let's see. Quickly, I'll pace up a little bit, and then towards the end, it's media. I don't like to talk about media. There's nothing much in it. FMCG and IT. Now, FMCG is crazy, choppy, range bound. If you take a look at the CNX FMCG, it's a put off actually. Just look at the condition of the sector at this juncture. Honestly, if CNX FMCG were to be traded, it's very difficult to make some returns out of this kind of a formation. We can clearly see the huge spiked up shadows on both the directions. I mean, these are the ones. These breakouts are failing very badly, so stay away. Is it improving? It is definitely improving. The daily chart is definitely improving, but the improvement, I would say, is not enough for you and me to jump on board. I would still give it some time. I'm in no hurry. The one which is really important at this juncture, and I'll conclude my sectoral analysis with that, is the CNX IT. The CNX IT in the recent fall is from a high to low basis. If I calculate from the highest point to the lowest point, it's close to 15% correction in 8 weeks, so 2 months. And it's been a complex correction. It has fallen in multiple legs. So what next? This is not a small correction, a 15% sectoral correction. Now, of course, it's now back to these highs, which is 33K for the CNX IT index. This is September 23 highs. Now, CNX IT is not traded per se. This is a derived index. So I'm not going to do any volume profiling or anchored VWAP. I don't think it makes any sense here. It's a derived index. We have to go by the price formations and the highs and lows. So September 23 highs, that's where it's knocking right now. I don't see any slowdown of momentum on the weekly yet. I see choppy behavior of momentum on the daily. Trend is still down, momentum choppy, not much strong signs of divergences. I can conclude that there are no immediate signs of slowdown, but we should wait and not short at this juncture. This is not the place or the price where you should look to short the IT any from here on. Can we buy? As I said, there's no sign of. So just let it be IT and FMCG. Let it be FMCG for some directional clarity. IT, I would say, number one will be signs of slowdown of selling. 2, some kind of a divergence or some kind of a base building formation. 3, any of the top 3-4 names like Infosys, TCS, Wipro, Tech Mahindra, HCL Tech, whether they give some kind of a trend reversal, if someone can lead that move. Last time HCL Tech did lead. Some kind of a leadership coming from any of those stocks or not. Results season, so one should keep an eye on that results as well. So overall, before I take up your questions and we talk about the performance of the month of April, markets are in a very tough zone, volatile. Level wise, last week's low can only trigger downsides. Slip below last week's low and close below last week's low. Short term point of view, 22,300 to 22,350. Upsides, of course, the all time high. Stretched, not the place to go aggressive on the long side. To play the short side, you need to have some confirmation. And on the short side, whatever little success that I had recently was, I did not decide to sit on the short trades for long. It was more of a short term trade. Get out, and this is not the kind of market where you do trend following on the short side. Very difficult, actually. Right? Okay, so that's the index and the sectoral analysis. Let's quickly update our sheet, the open trades that we have, and then I'll quickly take a look at few of your questions and we'll discuss the month of April, the performance for the month of April.